And welcome back to another Sunday Satoshi Live. I'm your host, Colby, and here's regular guest, Ben LeNeave. What's up, Ben?
Not too much. I'm enjoying a cloudy but lovely Sunday in
Not too
Kentucky.
much. You have got to be kidding me. There is so much going on right now, Ben.
Yeah,
I can't wait to talk about it.
I don't know why that's always my default response. Really, that's a lie. Whether I'm talking about myself or about the news in the world, that's the opposite tends to be true. It
For real. Especially right now, man. Like
really,
every
there's too
week,
much,
we,
too much going on all the time.
we go deeper and deeper. The rabbit hole gets deeper and deeper. Let's go ahead and get started properly. It is block number 780,528 that we're starting this Sunday Satoshi today. Let's get a little simultaneous sip in and let's get straight to it, my friend. Ben's staying hydrated out here, folks. I'm sipping on my peppermint tea and ready to go. Whoa, we lost Ben. We lost Ben. I might need to go ahead and do this live. We're going to be talking about Silicone Valley Bank. We're going to be talking about chaos in the markets, folks. Just when you think you've had enough, you haven't. Welcome to Bitcoin. Welcome to the clash of worlds. The worlds colliding between fiat and Bitcoin. These are the times that we live in, and we're seeing history made before our eyes as banks start to collapse, as the fiat system starts to fall apart. And this is one of many reasons why we Bitcoin. Am I right, Ben? Can I get an amen?
Amen, amen. It seems to be that we are. It's being proven that even the stable coins are proving to be less than stable, and
No kidding.
I guess if you're trying to stabilize something off of something else that is inherently unstable, then you're attempting something that's impossible. So
Are you daring to insinuate that the US dollar is not a great store of value, good sir?
the way that it's being stewarded by our government, I would say no, no.
I mean, it hasn't been stewarded good ever, really. I mean, especially since 1913, especially since we went off the gold standard, it's been all downhill, folks. Everything's
Right.
been kind of trending towards zero on the fiat standard, but what can you do about it, right? I mean, it would if only there were a technology that allowed you to store your value in something that was truly scarce. If only there was a technology that was designed to not be inflated forever.
Wouldn't that be nice?
If only there was a technology that allowed you to store your value in something that actually stored your life and your energy and your time in something that doesn't trend towards zero forever. Imagine thinking that fiat money is good money. I do not understand. I don't understand it. Like, I don't understand it.
Yeah, and imagine having your wealth not in the hands of a bunch of sociopaths,
Kleptocrats.
sociopaths, technocrats that do not like you or have your best interest in mind. A small group of them. Imagine having it decentralized in the hands of a bunch of millions of savage, independent, and intelligent people all around the world.
Yeah, and really, Bitcoin is something that's completely out of our control at this point in time. I mean, the technology truly does have a life of its own, and
Mm-hmm.
it's like a wildfire spread across the internet. It's money that's native to the internet, but I digress. Let's get into our subject matter of the SVB shit show Silicone Valley Bank falling apart over the weekend, and the markets are going to be rowdy come opening time. And it's funny how how TradFi markets are only open, Monday through Friday, and it's 2023. But we're buckle your seatbelts, folks, because we're in for a bumpy ride. I'm here for it. I'm not selling. I've got the mentality of I don't care how bad it gets. I'm fitting to hodl as much as I can throughout. I'm stacking on principle. I'm stacking for reasons beyond just fiat gains and price and all that. So yeah, thanks for joining us today, and let's get into it. Yeah, I'm just honestly blown away by all the news. You know what I mean? Like, I'm blown away at, it's just constant, right? It's one after another after another. It's just craziness, and I think we're seeing like an accelerationist. We're seeing things accelerate before our eyes, and the Fed keeps hiking rates, and we'll get into it in a moment here. But the Fed keeps hiking rates, and they've Chairman Powell they've said they're going to keep hiking till things start breaking, and I think that's what we're seeing.
Yeah, well, it's kind of funny. I mean, that's what responsible, financial people, I think, we're saying for the last 20 years is what needs to happen. And,
they printed too much money. Let's face it.
But when it breaks, is it going to, I guess in the past we thought we could raise the interest rates, until it came back to a natural place where things could correct. But did he literally say they're going to raise interest rates until things break?
Yes, I'm paraphrasing that, but yes, the Federal Reserve has said they're going to raise until things start breaking in the economy. They want to see more unemployment. They want to see things start to disconnect. As far as, I mean, to be fair, I think it's all a charade in a sense, because like I don't think it's possible for them to get inflation back under control. I think we're past the point of no return. So I don't think that's a serious thing, frankly. But that's where we're at. And they're going to just keep raising rates, and the markets are going to start falling apart due to a lack of liquidity, basically. I mean, when you print a bunch of money and you create bubbles, and then you start taking money out, you start trying to raise rates on all of these inflated bubbles of new money. I mean, they've increased the monetary supply massively. So to think that they're just going to step in and start raising interest rates is impossible in my estimation. But, that's my viewpoint. We'll see. But we're already starting to see things fall apart.
Yeah. The Fed seems to be good at over or underestimating things by vast margins. They don't seem to be very good at accurately pegging things. It's like they're always, 10 steps behind their own actions.
Exactly.
Reacting to the unforeseen consequences of whatever they did, a couple months or a couple years back.
Yeah. They painted themselves into the corner. And at the end of the day, like, our tax receipts hardly even cover the interest on the debt. So now the interest on the national debt won't even be covered by tax receipts. And we're headed into a recession, so tax receipts are going to go down. So we will not even be covering interest on our debt, let alone paying any principal. So basically, the entire economy is based on debt. It's nothing but debt. And and any value that's actually in the economy is getting siphoned away through the debt-based system, where now, due to inflation, you have to be making more than the rate of inflation to even be breaking even. And that's a challenge in and of itself. So
yeah,
things are whack, brother. It's clown world on steroids. And you know what? Like, the way I see it, I'll just say this before we get to our kind of subject matter for this week.
Mm-hmm.
But the way I see it, as a former gold bug who likes, who loved silver more than gold, but the way I see it is there's not many options. There's not many safe places for people to hide from this mess. If you
right.
think of, I mean, we're two young guys, right? But there's a lot of pensioners. There's a lot of people that are relying on these unfunded liabilities that the government has promised all of these social programs and all of this Social Security and all of the the Medicaid, Medicare. There's no money, folks. I mean, it's nice that the government says they're going to pay it, and they probably will. But the way that they're going to do that is by inflating the money supply. Let me say
right.
it again for the people in the back that may be watching this live stream. There is no money, and the only money that there is new money that will inflate the monetary supply. So, what are you going to do? You need to find a life raft. You need to find a life raft.
Talk about a snowball, when you talk about the tax receipts not even meeting the interest, that's when the snowball's really catching some momentum that you're not going to be able to capture anymore.
Yeah, it's not looking good, Brev. It's not looking good. And it's a hard conversation, but I think, there's hope, there's light at the end of the tunnel. But you have to first acknowledge that we are up shit creek with no paddle.
Right. Well, we do have a paddle, but the paddle is what is putting the shit in the creek, and it's called printing money.
Precisely.
That's the only paddle that the government knows of.
There you go. So let's get into it. I think we said we're gonna cover the Zero Hedge article first. Record bank run drained a quarter or $42 billion of Silicon Valley Bank's deposit in hours, leaving it with negative $1 billion. So, as everybody has probably heard by now, Silicon Valley Bank has been effectively shut down by regulators. It is insolvent. It is belly up, and now everybody is wondering what is next, because as everybody knows, the banking, with fractional reserve banking, it can be a house of cards. It's based on faith and faith alone. And if you grab, I'm reading the 10X Rule by Grant Cardone again, great book, and I'm using a $100 bill as a bookmark.
Nice.
This is just a piece of paper.
Right.
$100 when I was a kid was like, if I thought it was a lot of money, and I still think it's a lot of money, don't get me wrong. But only because it buys sats, only because it buys a lot of sats. So 500,000 sats almost, or whatever it is. But it's just a piece of paper, and it's faith and faith alone. So it's funny when people say, like, they loll at any other idea of money, whether it be gold, whether it be something else, right? And people say, oh, that's not money. Money is what you can use at the store to buy stuff. And it's like, that is purely a faith-based statement.
Right. Yeah.
I don't know how we got there. I was getting into the article, sorry.
It's all good. Let's see. But yeah, it's also kind of interesting, and maybe like some poetic justice or something in a way that the first domino to fall, if there are going to be any dominoes falling quickly behind it. But either way, this domino, is the Silicone Valley Bank, the woke leftist, technocrat billionaire, bank. And I don't know if that's proof.
They're massive. I mean, they're what, the 18th largest bank
Right.
before they fell apart. They're a massive, massive, massive bank, processing tons of payments, more than people realize. A lot of payroll processors, and I mean, the way that the banking system works is like transactions get routed through other banks.
Mm-hmm.
So you may not think that like you've ever used SVB, but you probably have one way or another, like, or your employer has, or whatever.
Yeah. Or
I mean, even like I think it was
third
Etsy.
party.
I think Etsy.
Right.
I think Etsy like couldn't pay people because
Yep,
they use
I heard
SVB. But yeah, you don't see it's a web, right? The thing, it's all intertwined. It's all intertwined, and it's got systemic risk, and black swan events happen, and when they happen, because we didn't learn our lesson in 2008, and sorry, I can't remember. Did something else happen around 2008, 2009? I think somebody published a white paper about some decentralized money thing or something. I was trying to recall it back to my memory, but
yeah, I guess the Bitcoin ball did start rolling in its initial phases around then.
word, and the Genesis block, literally ingrained in there. Satoshi put a message about the banks falling apart, right?
Mm-hmm. I wonder, do you think he designed the whole program in the few weeks between a few of those banking issues in 2008 getting started and him releasing it? Did he do it all in a month and a half?
Something obviously motivated him to actually publish the white paper when he did, right?
Mm-hmm.
Certainly it took a lot of genius and research, and he stood on the shoulders of giants of other technologies to build and put together what he put together. But the timing is very interesting indeed.
Yeah, and it's like maybe he foresaw, or maybe figured if we survive this 2008 situation, then maybe this will be the life raft that'll carry us out from when it inevitably happens again in a more dramatic fashion that maybe is not something that we can get out of.
Yeah. I mean, obviously we need good money. We haven't had good money.
Right.
Gold was good money for history, and now we have the internet. So we need digital gold. We need a solution for money in the age of the internet, in the information age. So, anyways, so, here we are, banks falling apart, and the question is, how much exposure do other banks have to the 18th largest bank, which is SVB, or was SVB,
right.
post-mortem. So, let's go through some facts about that. I'm just looking at Zero Hedge. I mean, everybody basically knows that the bank was shut down. They got shut down by the California Department of Financial Protection. Of course, there to clean up the mess. But it's such a mess that, there's a lot of talk about, the FDIC, right? Well, what's up, doggo?
Yep, this is Hershey.
What up, Hershey?
Hershey food, and food requires, sound money at some point. So she's a fan.
Oh yeah. So, so basically, 97% of the depositors at SVB are not insured, are not
Right.
covered by FDIC insurance. It is a commercial bank in a true sense, in that most of their depositors were large depositors that would not be covered by the FDIC insurance. So
Right. If you've got $500 million in the bank and only $250,000 is insured, you're essentially uninsured.
yeah, and to provide more accurate numbers, Ben, according to the Zero Hedge article, $173 billion in deposits,
Mm-hmm.
and 151 of the 173 billion, 151 and a half were uninsured. So the vast majority uninsured, and they had a bank run, and life comes at you fast, and lo and behold, when you operate on a fractional reserve system, it doesn't take a lot of people withdrawing their deposits. How much was it? It was 40. Let's see. It was $42 billion, and then they found themselves one billion in the negative.
Mm-hmm.
So, welcome to fractional reserve banking. And the question is, how much exposure is there to other banks? You know, obviously we've seen issues with USDC. Why? Because Circle has about 25%, uses for managing 25% portion of USDC reserves held in cash, and one of the 6 banking partners Circle uses is SVB. BlockFi already went bankrupt, but they disclosed that they have $227 million in unprotected funds in the now insolvent bank. So
Who's BlockFi? Are they? Do they manage some alt shit coins or what?
So BlockFi is it was like a DeFi thing where you could borrow against your crypto and leverage up, and so
they're probably doing stuff with Ethereum or whatever.
Well, Bitcoin, Ethereum, crypto in general, you could borrow against it, and you could also earn yield by lending. The problem is it's a roach motel where you put your assets in, you don't get it back if it goes belly up. So good luck getting it back from the bankruptcy proceedings. I feel for those folks, because I mean, to be fair, when I first got into just having a look at Bitcoin, the first thing I did was I bought some stable coins, and I was trying to earn like 2% on my stable coins in some of these DeFi platforms. And I only looked at that. I was looking at it, and I would make like, I don't know, like a few cents a day on my deposit.
Uh-huh.
And then I'm like, this is stupid. And then I just bought Bitcoin. That was the first time
Nice.
I did that. And everybody's like, that's how I came to it. And it hasn't gone well for people that put their funds in Celsius or BlockFi or what have you. So, or Gemini Lend or these other kind of lending platforms that have had exposure to the fallout. And the thing is again, like, in crypto, there's no lender of last resort. There's nobody to come save your ass when you do yourself in. And now, of course, everybody, what's the first thing that people do is they say, okay, like, this bank is insolvent, and there's so much venture capital money here, and it's technology, and we need to bail it out, etc. And they're looking for a bailout, right? I mean, what's the first knee-jerk reaction is, when's the Fed going to bail it out?
Right.
So,
but really, what we need is to, let things heal, let things that are, poorly designed fail.
Yeah, and there's so much pain in the market, and perhaps nature is healing by people realizing that they need to learn more about Bitcoin, do their own research, and learn how to be responsible about their money, take responsibility and over their money, and learn how to self custody, learn how to stack sats and stay humble and not over leverage, because you get to, there's painful lessons to learn here. And maybe that's what it takes for nature to start healing.
Yeah, could be the biggest blessing in the world, for a measured amount of pain in the market that might wake up a lot of people and give a lot of people an opportunity to secure their finances in maybe a technology that is designed with a little bit more security and
100%.
Longevity in mind. It'd be nice
100%.
if people could have that opportunity without without everything imploding to the point where people are going to be actually starving and things like that. So
yeah,
absolutely.
absolutely.
Let's pray that people can read the writing on the wall in this situation.
Exactly right. Hey, let me just plug my my charger in, and then we'll jump into these articles. We'll do some memeing because we forgot to meme last week, and and yeah, and then we'll sign off. But let me just plug my laptop in real quick. Sorry, folks.
Ooh, pardon me. Yeah, appreciate anybody that tunes in or watches. We're here. Me and Colby don't know everything, but we've been trying to educate ourselves on Bitcoin, and Colby's dove in head first, a little bit ahead of me. But the more I learn, the more I find that it seems to be a technology, and it has all the fundamentals of money that almost nothing else can compete with, or literally nothing else can compete with these days. So I'm excited to be involved. Wonder where Colby went. I guess his computer's doing something there. And he's back. And it's funny that people talk about diversification being good for your portfolio. You want to diversify your assets, your investments, your savings. But if all of your diversification is still based in the same units, measured in the same units, and that unit is inherently unstable, like fiat currencies, then you're not really diversified. You need to be diversified in different types of assets, in a different form of money that actually might be inherently stable. I think people have called Bitcoin volatile plenty of times, and there's some truth in that statement. But Bitcoin is also a new young toddler of a currency, a newborn infant, still catching its breath, and also catching the attention of bigger parts of the economy. So there's going to be some shifts, but there will only ever be 21 million Bitcoin. There is a strictly set inflation schedule, and with that being the case, we can trust that as long as people continue to recognize the value and the Bitcoin network holds, its robust security, then your Bitcoin will hold its value. Alrighty. I'm gonna try to find something to read for us while Colby's figuring out his technical situation. I don't want to read the article that Colby and I are planning to go over, or those articles, because I would rather do that once Colby can be involved. SVB, Silicone Valley Bank, latest developments, live blog, futures, and gold jump as the Fed and the Treasury prepare emergency measures to bail out the banking system. 6:10 p.m. Eastern Time update, Sunday, March 12th, 2023. Futures have opened for trading sharply higher, with Bitcoin and precious metals also spiking amid rising expectations of either some sort of bank system bailout / backstop, or more likely, an end to the Fed's hiking cycle. Echoing what the Washington Post reporter in an earlier trial balloon, Bloomberg writes that the Fed and the Treasury Department are preparing emergency measures to shore up banks and ensure they can meet potential demands by their customers to withdraw money. As reported earlier, the Fed is planning to ease the terms of banks' access to its discount window, giving firms a way to turn assets that have lost value into cash without the kinds of losses that toppled Silicon Valley Bank. And their access to the discount window. Let's see. As we noted earlier, the access to the discount window was never an issue. What is the stigma associated with using it and the likelihood that depositors will flee the moment it becomes public. Additionally, the Fed and Treasury are also preparing a backstop deposit. Fed's emergency lending. Colby, you're back.
My bad. Hey, thanks for taking it from the top and just rolling while my computer died. My bad.
It's all good. I just picked a two article. I don't want to run over all of ours.
Yeah, I appreciate it. So
it looks like there was an update on Zero Hedge like 20 minutes ago.
What was the update? Fill me in.
They're just about how the Fed and the Feds are just preparing to try to break one thing to make this can't spiral out of control.
Yeah.
Which good luck. I don't.
For sure. Let me just plug my ears in real quick.
Cool. I guess one of us have ears up.
All right, testing.
Check.
So, yeah, they don't want contagion, do they?
No. Bad. I might plug in my ears too.
Everybody knows, and I frankly I can't wait to get to the memes, because I know it's been kind of a rowdy show, like with some technical issues. Folks, bear with. We're working out the kinks. This is only episode 6, so I appreciate everybody's patience as we work out the show. But yeah, they don't want contagion. They realize that they have a major problem on their hands if things start to spread, right?
Mm-hmm.
Everybody, most people, except for the young whippersnappers out there, a lot of people remember 2008 and how painful that was.
Right. Yeah, I mean,
14 years ago.
I guess I was around to hear how painful it was, but I wasn't an independent adult, that had any investments that were capable of feeling any pain at that point.
Yeah, I mean, 14,
But
15 years ago, we were hurting bad. That made me at 18, 19 years old, like, I'm like, damn, like, how can they just print money? Right? And that's literally when I first started to learn about Austrian economics and stuff like that.
yeah, I think that's kind of what started engaging me in politics a little bit more, and also kind of blackpilling me on politics and the government, particularly government involvement in money in the economy.
Yeah.
Because Republicans and Democrats were all working together to do all the same stuff, before, during, and after the events around 2008. And that's one reason I was a Ford fan for a while, is they were the one company that didn't take the auto bailout, even though I'm sure they received plenty of credits
Subsidies
and subsidies and all that crap.
Yeah, I mean, there's a couple things I want to point out before we get to our memes. Did you ever send me your meme?
No, I slacked on the memes this week. I need to, but I'm pretty confident that this week will be
I got you covered.
possibly the dangest.
Yeah. Now you'll have more time to prepare, but a couple things that I wanted to mention before we get to that. Did I forget? I may have just forgotten.
The memes? Or before
no,
the
I
memes?
didn't forget the memes. What were we talking about before that?
We were reviewing some like 2008 kind of stuff for context, I guess. Talking about how most people in the economy were old enough to feel the pain back then.
Mm-mm. Oh yeah, it came back to me.
That was what engaged you and me.
Yeah, it came back to me. So the real estate, right? The real estate market, real estate values came down a lot, and they were being very, how shall I say, reckless, I guess, with their lending practices that led up to the financial crisis. And basically the whole economy was going to go down the black hole of derivatives and leveraged banking. The whole world economy was going down, and then they decided to turn the printers on and start quantitative easing. And I remember arguing with older people, business people and whatnot, like, is there only going to be one round of QE? Is there going to be 2 rounds of QE? Is there going to be 3 rounds of QE? And I was listening to like Peter Schiff at the time and stuff, but turns out, up until they started hiking recently, it's QE infinity. And basically
Right.
It seems like everybody knows that they're going to turn that money printer back on. Everybody knows they're going to do that. The question is when. And the question is under what circumstances. So another thing to point out is real estate, right? So like real estate is basically most people's main asset. It's most people's net worth is stored in their illiquid house, and that has been the middle class hedge against inflation, is to have exposure to single family residences. And that's because in the fiat world, everyone's a speculator. You need to speculate and gamble with your money in order to preserve some sort of hedge against inflation. And that's a damn shame. I really think that it's important to kind of appreciate how it's hard. I'm gonna lack for words, but like it's a real tragedy that people need to speculate with their money in order to preserve their buying power. I think it's a human right that you should be able to save in good money and not have it stolen from you through inflation, because then people can't retire. They can't, pass wealth to other generations. They can't help their communities. if their money is trending towards zero,
Right.
it's a human rights issue.
Yeah, my grandpa. I mean, even though when he was a young man, establishing his family and buying a house, even though we had already been off the gold standard for a few decades, just as an example of how much further things have degraded. He was, as a plumber, when he was in his early 20s, he was able to save money and pay cash for the house that he got his family started in. And then, after he had a few more kids and upgraded, he got a small mortgage. But, it didn't take too long to pay that off either. And, things have just gone so far that, now most people don't seem to be able to even think about buying a house unless there's nearly nothing down and they're putting it out on a 30-year mortgage. And
yeah, and the average person changes. They buy a house and they're out of it in about 3 years.
Mm-hmm.
So
wow.
Home ownership is it's hardly home ownership the way that it's built. And
it's transferring the debt around.
Exactly, and it's all based on keeping people in debt forever, basically. Anywho, any other comments on this SVB thing? I mean, it's a mess. I think that's obvious, and there's a whole lot of skeletons in the closet, and that's really the big question: is what else is under the rug? We know the banking system is a toxic mess. It's just a matter of time before a black swan event starts to really take things apart. There's too much debt in the system, too much toxic debt, and not a lot of ways to hedge against it, unfortunately.
Yeah, I guess my last two points or items related to that might be, first, it's interesting that it is the, like I said, the Silicone Valley Bank. We know that, the values at SVB are probably among the wokest and the leftiest and the most communist and crazy. I've been told that, they were, at the point where even if they're the top of their corporate structure, they're not a meritocracy. They're checking diversity quota boxes. They're diversity, equity, inclusion, crazy people. And, you can't run a business or a bank by promoting people that aren't capable of performing the jobs that you're assigning to them. And, I wonder to what extent, because we know that, all corporations are kind of picking up on a lot of these, or most corporations are picking up on a lot of these values. And I wonder to what extent, a lot of the rest of the banking system is doing the same thing, or if it is more of an anomaly for SVB, and, whether that actually has a lot to do with them being that, this current first outstanding domino or not. And then secondly, speaking of turning the money printers back on, or what is the Fed or the government doing or going to do about this, is, of course they're going to probably money printer go burr with the situation in some way or another, but also, is there an opportunity for them to do their CBDC thing? And, are they keeping that card in their back pocket and, potentially thinking of deploying, or using this as an opportunity to sell or pitch that, in the near future?
Yeah. Yes.
Yeah.
I think the answer is yes. I mean, it's coming again. It's a matter of when are these things coming?
Mm-hmm.
When the banking, I mean, we'll see, man. Like I said, hold on to your britches, because it's gonna be a bumpy ride. you got to hodl on to something, folks.
Uh-huh.
So, your financial future is only going to be as good as whatever you hodl on to. Um, with that said, if there's no objections, let's get to some memes.
Sure. I wonder if we could start an exchange run on Bitcoin.
Well, we may have seen that. I saw Bitcoin ripped up like 5% at one point today. It's been pretty interesting to see kind of how it's being resilient right now with all the news going on.
Mm-hmm.
We'll see. I mean, there's been reports of people lining up at banks and stuff. I don't mean to overblow the situation, but we really don't know. We really don't know where the cards could fall here. I'm gonna try to share my screen real quick.
Okay.
And then we'll go to some...
I think our society, is also in a place where we're so numb. Most people are so numb to news, especially news like this, that I wonder if a lot of people might just keep their heads in the sand and continue doing exactly what they've always done, until something affects them directly and personally.
100%. I mean, that's how people learn generally.
Yeah, and I'm sure in some degree that is probably good for the economy, at least as it exists right now, because people are less whatever the fear index doesn't get tipped. The volatility of the fear index isn't quite what it would be if everybody was as engaged as you and I are.
I mean, this is let me say this. This is why it's important that we do stuff like this, because we can only help each other by sharing signal, by sharing good information, by sharing truth. And so this is why I get out here and I put my my orange shades on, and I'm out here preaching. I'm just a dude who meets up with another dude, regular guest Bitcoin Ben, and we just talk about not just Bitcoin, but what's going on, right? And I think all you can do is warn your fellow man, warn your neighbor, and just just keep it real, right? We just got to keep it real out here, and
right.
and people are having a hard time. Everybody knows the cost of living's gone up. Everybody knows that inflation is getting out of control, and I'm happy to share that I do believe that there is hope. There are solutions, and Bitcoin is one of the most important things that you can spend your time and energy learning about, because there are solutions to these massive life-changing problems. There's solutions. And so
right. Amen. And I think let's put this fear index term that I used into context. I know the fear index is a thing that the stock market and or the government uses to judge the economy or the trajectory of stocks based on selling, and they essentially view selling as fear.
Yeah.
So but it could be, I mean, you and me are people who have sold out, but and maybe you could say that there was a fear behind that, or maybe it's wisdom, understanding the fundamentals and what's inevitable. But really, if you sell some of those assets and diversify into something like Bitcoin, you have much less to fear. You should have.
Can you see
the mind from that? But yeah, I can see the screen.
All right. Can you see the memes?
No, I don't see any memes yet. I just see.
Oh, memes.
Your background.
My bad. Let me get my
your background in a browser window.
Let me get my poop in a group. 2 seconds. I promise it's worth it. All right. So, meme number 1, my friend. Can you be the grandma and I'll be the other lady.
Uh-huh. Bitcoin is still going to
No,
12,000.
no, you got to say it like a grandma.
Bitcoin is still going to 12,000.
Sure, grandma. Let's get you to bed.
When was this meme made? In like 2016?
No, it was made today. It's relevant today. I mean, there's
Are
so
they
much
saying
fear. There's so much fear in the marketplace. There's so much fear in the market. And you know what? Maybe it does. I hope it does, folks. I hope it does. I'm trying to stack some 12K sats.
Bitcoin, 40% off?
Let's talk about that. But I hope grandma's right. I hope Grandma Ben is right. Let's go to the next. Oh yeah, this is a meme in and of itself. I don't know if you saw this, but let me. I got too many screens going on, folks. Too many screens. It's a lot to handle. But check this out. This is a meme in and of itself. Look at this guy. This guy was. Sorry, let me get back on my screen here. Sorry, folks. Working the bugs out. All right, so this guy, Joseph Gentile, has seen some stuff. He is Silicon Valley Bank's chief administrative officer.
He does look like a Gentile.
And Joseph Gentile joined the bank in 2007, and he was the CFO for Lehman Brothers, folks. This guy was the CFO.
Oh, wow.
This guy's got a track record. This guy's got a LinkedIn to be proud of.
You can't make this stuff up.
He was the CFO, the chief financial officer for Lehman Brothers, prior to working at Silicon Valley Bank. I wonder who's going to hire him next.
Probably the bank that's going to fail first during the next cycle in 12 years.
This guy. I mean, he honestly looks like he knows something's about to go down.
Uh-huh.
But that's like a meme in and of itself right there.
He's got his, like, nearly pursed lips, just like,
yeah. He looks like he's finna crack a smile, and like he looks like he might know. I don't know.
He's trying to hold poker face.
Exactly. So, all right, and one last meme for you folks, and then we'll wrap it up. Where are we at here? Here we go. So, coming at you.
Oh, yeah.
It's funny how TradFi is only open Monday through Friday. Monday's going to be a doozy. Monday's going to be interesting. Markets in turmoil, but Bitcoiners just party on the weekend, and we party Monday through Monday. Markets never close, and final settlement every 10 minutes on average. What do you say we review some mining data just real quick before we sign off?
Let's do it.
Yeah, why not? What were you talking about while I was gone, dude? I tuned in to my own YouTube channel, and Ben was just taking it from the top. What were you covering?
I was just reading the top Zero Hedge article update from 6:10 p.m. talking about what the government's preparing to do in case the contagion is in fact contagious.
Mm-hmm. For sure. So I'm gonna go back on screen real quick.
I figured dead air is not very good for the live stream.
I appreciate that. I was proud.
People.
So let's go to brains. And let's just cover that recent difficulty adjustment. Mining insight on brains.
I could have picked up the Bible and gone and found in Deuteronomy where they talk about fair weights and measures or something like that.
Would have been strong. Your Bible game would have been strong if you whipped it over to Deuteronomy that quick.
I know it's in that book because I think I read it in there in the last couple months, but I'm not. My Bible game's not strong enough to probably be able to flip right to it or remember what verse. I don't know. There's like what 40 or 50 chapters at least in Deuteronomy.
I love me in the book of Deuteronomy. I really do. So
read it, people. It's your duty.
let's talk about hash rate. All-time high difficulty adjustment. We had a 1.16 difficulty adjustment upwards, and that happened just, I think it was yesterday. That was 342 blocks ago. So
is that the biggest increase in difficulty ever?
No, definitely not the biggest increase ever, but we're still at all-time highs in difficulty now. So hash rate steadily getting deployed, and this is at hash price is just over 6 cents, 6.4 cents per terahash per day. 295 sats per terahash per day. So well over 300 exahash online. It's pretty impressive to see that trend, but I just thought I'd cover that real quick before we signed off. Ben, do you have anything else to add, or?
Let's see. I'm just trying to break 300 terahash, but we'll we're getting there.
You gotta do your part. You gotta
right.
do your part, and I appreciate you coming through as always. Appreciate you coming on the show, Ben. And people can hit the links in the description of the video to find you, connect with you on Bitcoin Twitter, connect with you on Instagram. We still gotta get you on Nostr.
Oh yeah, we do.
And stack sats. Stay humble, folks. It's scary out there right now, but it's good to have certainty and own a little piece of the 21 million bitcoins or 2.1 quadrillion satoshis that will ever exist. So my intention out here is to learn a little bit more about Bitcoin every day and share some of that with you because I care about you, and I want to see people succeed. I want to see people succeed despite all of these challenges and this rigged fiat game. So that's all I've got to say. I'm signing off at episode 6. I appreciate you coming through, Ben. Salute to you, and I appreciate y'all watching out there. We'll see you next time.
Peace, love, sound money. Let's do it.
Peace, love, stack Bitcoin. Peace.